Greetings, colleagues. Welcome to another virtual lecture presented by the Corporate Services Unit. My name is Alwando Xolo Jabalala. I'll be the facilitator for this virtual lecture. Today we have Mr. Walter Bengu, who's a Senior Manager at the Auditor and General of South Africa in the Corporate Services Division. He's an admitted attorney who has been in the organization for the past 7 years. He holds a master's degree in international trade law. He'll be presenting a lecture on increasing government accountability through enforceable legislation. We'll really much appreciate an interaction, colleagues. We have a Q&A session. The questions will be answered at the end of the lecture. Thank you so much and enjoy. Mr. Bengu, over to you.
Thank you. Hear me?
Yes, I can hear you, Mr. Bengu.
Kindly unmute your mic, Mr. Bengu.
Okay, can you hear me now?
Yes, we can hear you, sir. Thank you.
All right, yeah, the joys of technology. On my side, it was showing I was fine. But as I was saying, thank you very much for allowing me to come and speak to this delegation at this stage. And I'm very much interested in the work that you do in terms of research. And I hope this is the start of what could be a very interesting and very fruitful and productive relationship. So obviously today, I'm just going to do a brief lecture. So obviously, sometimes with such presentations, you could go on for the whole day, but we're not here for that. I know it's a Friday, but basically it's to kickstart a conversation about, how as the Auditor General, we're very much focused in increasing government accountability through enforceable legislation. So it is quite important that, the work that we do, people are aware of the work that we do so that they can also be our brand ambassador out there on the type of work that we do, but also understanding the work that we cannot do. Because sometimes I do see in the news, people saying perhaps we should have done A, we should have done B, whereas obviously we work within the parameters of the law. And if we start working outside the law, we might end up being taken to court, as it were. But today, it's about us discussing how, as the Auditor General, a couple of years back, we decided to amend our legislation so that we can be able to actually push for constitutional democracy as entailed in Chapter 9 of the Constitution. So obviously, you are very much aware that the Auditor General of South Africa was actually established in terms of Section 188 of the Constitution, which in terms of Section 188 then outlined some of the powers that we have. So basically, on a very simplistic level, we are out there to audit the financial statements of government departments, of municipalities and other state-owned entities, but not only the financial statements, but we also look at the predetermined objectives. So if at the beginning of a financial year, a particular municipality says that they will deliver, for instance, roads in a particular area, then we come through and check if indeed they have done so. And then the third part is that we then ensure that we do so by also checking if they complied with legislation. So it's quite important that, those three pillars, we focus on them in terms of the Constitution. But if you go to our enabling legislation as well, the Public Audit Act, it then expands how we then do these audits for financial statements, how we look at predetermined objectives, and how we assess compliance with legislation. So I think as an introduction, that's quite important from the get-go, that you've got a general understanding of what the Auditor General does. So obviously we do share Chapter 9 with other institutions like the Public Protector. So a Public Protector would primarily come in to do investigations if, one, there's a complaint that is raised against an organ of state, or if they do so proactively. And then you've got Human Rights Commission that focuses on human rights, the Commission for Gender Equality that focuses on gender. So that's basically how I wanted to start this particular introduction with regards to the work that we do as an institution. And what I've just said here links towards what our reputation promise is in terms of our mission in actually strengthening constitutional democracy. But what our vision is to be recognized by all stakeholders as a relevant supreme audit institution that enhances public sector accountability. So as one of our stakeholders, the Moses Kotane Institute, one of our stakeholders, we need to ensure that obviously you do understand how we do assist you in terms of enhancing public sector accountability as an institute, but also you as an individual, because obviously the Auditor General is there to audit the government purse. And the government purse is something that you would be very much interested in, one, as a citizen, but two, as a taxpayer as well. So this is basically what it is all about. So when we talk about the amendments that came about a couple of years back in terms of the Public Audit Act that went through Parliament and finally got signed off by the President, is that the main component that everything flows from is that we came up with what you call a material irregularity. So the concept of a material irregularity was one that was not in the Public Audit Act before, but amongst auditors, it was something that was there in terms of a reportable irregularity. So if you, for instance, have worked in a big JSE listed company as an example, and your auditors come there and find that there might be instances of suspected fraud, or as an example, then you would have what you call a reportable irregularity, where that auditor has to then report that irregularity to the JSE itself. It must be in the report of that particular company. And in some instances, you'd have to hand over some of those matters to a regulatory body or law enforcement. So what we then did was to try and import some of those concepts in coming up with what you call a material irregularity. And I'll explain later to you how it is different from irregular expenditure. So I'm sure you are all very much aware of the concept of an irregular expenditure. And I'm going to be able to differentiate between what irregular expenditure is and what a material irregularity is. But it is quite important to understand that this all flows from this introduction of this particular concept and then gave rise to other concepts that we now see in our law today. So when we move quite swiftly to obviously why we had to expand our mandate, there is two aspects that are very important for us as the Auditor General in how we can strengthen accountability mechanisms within the public sector. So the first and foremost is that an accounting officer, such as a DG, for instance, or an accounting authority, such as the Board of Transnet, for instance. So there's a difference between an accounting officer and an accounting authority. If there's a board, you would have an accounting authority. If you've got a DG, for instance, you would have an accounting officer. And these are the individuals that are in charge of ensuring that things are done the right way within an organization, and they ultimately take accountability for that type of work that that particular organization is doing, whether the good or the bad. The second component of being able to strengthen accountability is ensuring that we've got an accountability mechanism that fosters, oversight in terms of, the executive authority. So an executive authority, as an example, would be your minister. What role should a minister be able to play in their particular department, even though there's an accounting officer who is the DG? But also oversight also extends to, for instance, the role that a parliament or a legislature should be able to play whenever they are exercising a particular form of oversight. So this is quite important for us as an institution. And you'll see from the slides that I've put there that obviously when it comes to the aspects of preventing irregularities, you must be able to identify an irregularity that could have a significant impact on an auditee's finances, on an auditee's resources, and how an auditee delivers. So obviously, when I talk about an auditee, I am referring, for instance, to a government department. I am referring, for instance, to municipality, right, or any other state-owned entity, for example. So it is important that we're able to identify an irregularity so that A, we can be able to rectify that particular irregularity. We can be able to ascertain as to, for instance, who is responsible for that particular irregularity, and 3, how can we mitigate future instances of irregularities from occurring again, right? And then the next component is obviously we need to be able to notify as an organization. So as Auditor General, when we come in, we must be able to timeously, notify an accounting officer that we've identified an irregularity during an audit, so that obviously appropriate steps can be taken. But obviously these steps must be taken within a reasonable time, and you must be able to give that particular accounting officer or accounting authority the necessary time to be able to do so, but the necessary space to be able to do so. Then on the other side, when we talk about the aspects of oversight, so here we didn't necessarily change anything in the law on who's got oversight responsibilities or monitoring roles, but obviously one of the main things is that we need to be able to highlight the most critical or the most material matters to these oversight bodies. So I'm sure many of you have seen over the years the role of a scoper, for instance. So if you remember, Scopa is usually chaired by an opposition member, so that obviously you can be able to hold account the governing party as an example as they deliver their mandate in terms of them being in government. So we are able to give, for instance, a Scopa in Parliament, the highlights of material irregularities that they must have on their radar at all times. So it is quite critical why the expansion of this mandate was necessary. But obviously, it is important to also bring to your attention that we did not in any way seek to amend the Public Finance Management Act or the Municipal Finance Management Act as an example. We are just here to actually strengthen and solidify the accountability responsibilities that individuals have in terms of the PFMA and in terms of the MFMA. So it is not to say that there is now going to be a conflict between the PFMA and the PAA. To the contrary, they work hand in hand, and we're here to be able to assist government to be able to deliver on their mandate and what they have promised that they will do, but also doing so by spending public funds as they should and in compliance with legislation. So that is why it is quite important for us to explain why it was important for us to expand our mandate. Also, you'll remember there were many times where people would say, or citizens would say, but AGSA, every single year, you pick up irregular expenditure, and irregular expenditure keeps increasing, and you're doing absolutely nothing about it. But one is to always remember that we come into audit, bring a report, and then those charged with governance must then implement, course correction in terms of ensuring that whatever we've picked up in terms of irregular expenditure, fruitless of expenditure, does not occur again, but also to have the oversight bodies being able to do something more. But we realize that perhaps we can actually do more, but we have to change the law. So there was no ways we could do more and act outside the parameters of the law, because I'm sure you've seen with so many court cases in the public sector that we would be taken on review and our decision would be set aside. So that is why we went through this process of including this concept of a material irregularity. Now, what is a material irregularity? And as you can see from your screen there, I've actually made sure that I've put in bold the most critical words within that definition, because they will assist you to have a better understanding, especially because it's a new concept. So we need to ensure that we explain this as best as we can. So a material irregularity, first of all, means that there must be any non-compliance with or contravention of legislation. So already, as I said earlier on, we already pick up non-compliance during our audits because it's the third leg of the auditing that we do. So automatically here, it was quite easy for us to adapt to this because we had the ability to pick up non-compliance. So if you did not comply, for instance, with the PFMA, already the first tick is triggered as to whether or not we're going to get to a point and whether or not this is a material irregularity. So it could be contravention of any law that a government department must abide by, that a municipality must abide by, for instance, any law, right? But obviously, in an audit process, we do a lot of scoping in of legislation. So this is the legislation we're going to look into. But if we pick up any other legislation that is critical during an audit, then we can be able to raise a non-compliance or a contravention of legislation. Right. The second part is that we can also now be able to pick up aspects of fraud. But here we need to be very careful because remember, you can only say someone is definitively committed fraud if one, the police have done an investigation, the prosecuting authority has raised a case in court, and the court has found that particular individual guilty of fraud. But what we do here in this respect is that if we suspect there is fraud, right? If we suspect, so we are not the competent authority to say that there's definitively fraud, but if we suspect that there is fraud, then that's one of the things that we are going to pick up. And obviously, for those who know, the auditing standards, know that there's a standard called NOCLA, which already charges auditors to be able to pick up instances of suspected fraud. And in the private sector, when they report this as a reportable irregularity, as an example, right? The next one is theft. So if anyone within the department, for instance, has stolen, or we've suspected they've stolen something, then we must be able to pick it up. And theft could be something as simple as someone came in to steal machinery that is within a government department, and there were no controls in that particular department to be able to detect that people are actually stealing from that particular department. Right. And then we say, oh, right, if there's a breach of a fiduciary duty, so this actually applies a lot of the times in the Companies Act. So if you know within the Companies Act, and I did notice that you are established in terms of the Companies Act, whoever sits on your board, right, is charged with ensuring that they exercise their mandate with the necessary due care, right? And due care there is a fiduciary duty. You must do the best you can for your particular company, for your department, and use money accordingly. So if we pick up that there's a breach of a fiduciary duty, then in that instance, there could be a material irregularity. But I'm going to give you a qualifier a bit later. And we need to be able to identify these non-compliance, contravention, fraud, theft, or breach of a fiduciary duty during an audit performed under the Public Audit Act. So we can only exercise this power if it is during an audit in terms of the Public Audit Act, which is our enabling act, and then it results in, or is likely to result in. So it's either this aspect of financial loss has already happened, or we can foresee that it's likely to happen based on the evidence before us, results in a material financial loss. So what has happened here is that before we had this amendment, we used to have only irregular expenditure, and irregular expenditure still exists. Irregular expenditure means, you are actually spending money of a department without following or without complying with what the law says you must expend of that money. But here, a material irregularity expands it to what we call a material financial loss. So if there's a loss that cannot be picked up, because there are some instances where there's irregular expenditure, but the department didn't lose money, or the department got value for money. It's just that the way they procured, they didn't, for instance, ensure that there was a valid tax clearance certificate, but the services rendered are still within the budget the services rendered are still to a company that is able to deliver. But here we're talking about a loss where, for instance, we can pick up that in this instance, as an example, right, you went ahead and contravened the law and you ended up losing R1 million, as an example, because you were not able to get value for money, as an example, or you overpaid for services rendered, just as an example. And at this stage, the materiality figure, so auditors put what you call a materiality figure, is R1 million. So if we come in and say that in this particular transaction, you've lost more than R1 million, it becomes material, right? So that obviously we can't pick up every single non-compliance in an audit cycle because you've got 2 months to audit. But if it's R1 million, it's easier to flag it within your financial statements, as an example. The next component is if there's a misuse or a loss of a material public resource. So if, for instance, we find out that amongst the police, there are people who are misusing the police van, for instance, and it's leading to a particular loss, or they lose a whole fleet, for instance, of police cars, then there's a misuse or a loss of a material public resource. And the last component here is that perhaps there is a substantial harm to a public sector institution or the general public, right? When you talk about a substantial harm to a public sector institution, I think we can just give a recent example at what has just happened at the Department of Justice, where there was someone who hacked into their system, and there perhaps may be a substantial harm because there's been a breach of the data protection laws there, and perhaps people's information is now in the public domain. That is a substantial harm to the public sector, because now you, as a citizen who may have had your information sitting there at the master's office because, for instance, you were an executor in your state, now your information is out there. So not only is it a substantial harm to a public sector institution, but it is also a harm to you as a member of the public. So that is the quickest way to explain what a material irregularity is, and how, as an organization, we are now charged with actually being able to pick up a material irregularity. And what that then does is that once we've picked up the material irregularity, and you'll remember in one of my first slides, I said that there are certain responsibilities for an accounting office or accounting authority, and there are certain responsibilities for oversight in terms of addressing these material irregularities. And so one of the powers that we have, and I'm going to start with the one in the center because it is the most critical one, is that we can now make recommendations. And I'm saying it's important because you will remember there was a case where the public protector's powers were taken to the Constitutional Court to determine if Chapter 9 institutions make recommendations, are those recommendations binding? So you remember before this, we used to just give an opinion and someone else had to take that opinion further. But now we can make a recommendation to say, you will take this action to rectify the material irregularity, and you must do so within a particular period of time. And if you fail to do so, then you are now further contravening the law, and there may be consequences for that. And I'm going to show you the consequences just now. The other power that we have now is the power to refer. So before, if we picked up any irregularity within the system, what we had to do was to ensure that we alert the accounting officer for the accounting officer to take it further. We would just alert the oversight body to take this matter further. And that was the end of our responsibility. But now, we now have the power, for instance, to refer a matter of suspected fraud directly to the police. We are now able to refer a matter of maladministration directly to the public protector. We are now able to, for instance, if we pick up instances perhaps that lead to gross financial misconduct, we can now refer it directly to the SIU. Whereas before, that was a responsibility that was on the shoulder of the accounting officer. But I'm sure you'll note that sometimes perhaps the accounting officer themselves may have been involved in an irregularity, and they had no incentive whatsoever to refer any matter to the police, let alone report themselves to the police. right? And then obviously that investigative body takes the matter forward and then just informs us how the matter was dealt with. The third aspect that has actually come about from this particular aspect is that we can now issue a certificate of debt. We can now issue a certificate of debt. And I think we are one of about 6 auditor generals around the world that have got this particular power. So what it means here is that if we make a recommendation and then you don't implement the recommendation, which becomes a remedial action, which is binding. So we can say, we recommend you do this, you don't do it, then we issue a remedial action, and you still don't do anything about it to perhaps recover money that has been lost. Because remember, a material irregularity has got a financial loss. So we need to be able to identify who made that particular loss and how we can recover that particular loss. But if you, for instance, as an accounting officer, do not do so, then we can now start a process whereby we will hold you personally liable as the accounting officer from your own pocket. This is very important because I'm sure you've seen over the years that sometimes if there's litigation, the accounting officer uses the funds of the department to fight litigation, even though they don't have a strong case. And that way they don't feel the pinch. But with regards to a certificate of debt, what happens here is that if Walter Bengu is an accounting officer and has failed to implement a remedial action, then he must make representations to the AG as to why we should not hold him personally liable for those funds that have been lost. And if he cannot prove that why he could not do it, then we issue a certificate of debt in their name, and the fiscus must be able to collect that money from him with the assistance of the executive authority. So the minister will now be charged to ensuring that the particular individual pays back that money, as to use lexicon that we're used to these days. So these 3 components are the ones that are quite important. So because this amendment came into effect in 2019, at this stage, we've only exercised the power to refer, we've only exercised the power to recommend, and quite recently, in the last audit cycle of PFMA, we just recently also issued a binding remedial action. So at this stage, no accounting officer or accounting authority has actually had a certificate of debt issued against them. And it's not something that we want to see, because first prize is just to ensure that, as I said before, we identify the material irregularity, we are able to identify who's responsible for the irregularity, we're able to correct that irregularity, and ultimately we're able to put in measures that can mitigate any further occurrences or instances of this material irregularity happening again. So this is basically the crash course on how we do this identification, but obviously I'm not going to delve too much into it because I still want to give you an opportunity to grill me and ask me questions on some of these concepts that I've raised. But this slide just basically shows you, for instance, what a typical auditing cycle looks like and how, for instance, we are able to pick up a material irregularity on a continuous basis throughout the life cycle of a particular audit. And the last point I want to raise here, so that at least I can give you guys enough time to ask me questions, is that, to date, when we look at the actual data that we have, the material irregularities that we've picked up are actually centered around 4 significant categories. And as always, procurement remains number 1, because most of the non-compliance that we pick up during an audit process is during, for instance, a procurement process. So as an example, non-compliance in a procurement process resulting in overpricing of goods. And I know you are very much aware that this is one of the biggest problems that we have in public sector, that a lot of companies, they overprice us. And one needs to just look at, for instance, the PPEs, how something that is worth 20 Rand per PPE ended up costing us 120 Rand, for instance, because we've been significantly overpriced. Because there's nothing wrong, for instance, with having a markup so you can make a profit. But obviously, there were parameters that National Treasury set for PPEs. However, there was still overpricing that occurred in that respect. Or one of the popular ones that we always see every single year is whereby a supplier does not deliver. And during my previous presentations, I've always given this example of where there was a particular municipality that after there was a protest in that particular municipality, that there was no road to the dam for them to be able to access water, the municipality then responded by by advertising a tender for the building of a road in that particular area. It was worth 100 million rand. They went through the process and they gave it to Company A. But what this municipality did was that they gave Company A the 100 million in advance and trusted that the company would deliver the road. A year later, the same protesters came back and said, we still don't have a road. And this is after the 100 million had been spent. What happened in that municipality? The municipality forgot that they'd got on tender the last year, and they ordered on tender again and appointed another supplier, and again gave them a prepayment of the full amount, and again there was no road that was delivered. So this might sound far-fetched, but these are some of the things that we pick up in the environment as we audit. The other one relates to, for instance, expenditure management. For instance, is payment for goods and services of a poor quality, for example. So you need to ensure that you inspect the products that you receive, that you paid for, so that at least you can ensure that you're effective expenditure management. The other one that is quite critical is the one about revenue management, that you need to be able to recover your debts. Because as a municipality, for instance, you must be able to recover any debts that are owed to you for services rendered. And then the last one relates to resources management, where you are not safeguarding your assets. So you remember earlier on, I told you about how, for instance, some of the departments, for instance, have some of their assets actually being stolen. So these are the critical aspects that we picked up with regards to our material irregularities process, and we're now in a situation whereby we're able to issue recommendations, or we're able to issue, for instance, remedial action which is binding. But as I said, we have not got to a point where, for instance, that we've issued a certificate of debt. I would like to pause here because we have spoken for about 30 minutes, so that at least you can be able to grill me. I've got my paper and pen here, and let's see if there's any questions I can answer, or if there's something that I've not addressed today that you've been curious about. So over to you, Program Director.
Thank you so much, Mr. James. We just have a few questions. One question states that in terms of non-compliance, is it only SCM, finance, or are there other units in the organizations who are involved, like when you're looking at compliance?
Awesome stuff. No, thank you very much. So there's always that aspect that says that only SCM or finance are the ones that are always not complying with legislation. But I can give you a simple example. When you look at a government department, for instance, that needs to employ individuals in terms of the Public Service Act. So that's HR. So the Human Resources Department knows what policies they must have in place that support the Public Service Act and how we employ. And I'm sure you've seen some of the SOEs or in some of the departments that there have been those types of non-compliances. So in that aspect, and I think there was one this week where the public protector even gave a finding to say a particular individual was employed, but contrary to the Public Service Act, and therefore he must be able to pay back all that salary because there was a contravention there. So us as auditors as well, we would look at, for instance, the HR process as well, and see if, for instance, people who were employed during that financial year were employed in terms of Public Service Act, and if not, what is the financial loss for employing those particular individuals. So it is unfortunate that SCM and finance carry the biggest brunt of an audit process, but there are other departments, even an IT department, for instance, if there's a breach that leads, for instance, an IT breach that leads to substantial loss of information, and then there's a financial loss that comes from it, there are also people that can also, unfortunately, come under the radar. So it's not only SCM and finance. I hope that answers that.
Yes, thank you. A follow-up question on that. Where you find a material irregularity in an organization, So I'm assuming that you not only look at the portfolio of finance and SCM. However, what I want to find out is, in order for you to pierce the corporate veil in terms of issuing that certificate of debt, besides just looking at the unit itself, would you look at, for example, a person who holds the capacity of a director, a CFO, a board member, specifically in their own personal capacity? Thank you.
Yes, that's a very important question to ask, because sometimes you wonder who exactly is getting this certificate of debt. So if you look at the process that leads up to an issuance of a certificate of debt, let's say, for instance, there has been a financial loss because of the way that HR employed someone contrary to the Public Service Act, right? And you've got this individual earning 1 million rands per annum, right? And the HSA comes in and picks it up. We then tell the accounting officer that, accounting officer, please take the following actions within a year, for instance. So we don't say within a month, we say within a year. And then a year later, we come back and the accounting officer has still not done anything. 1, to take disciplinary action, 2, to take corrective action in terms of the system, but 3, in terms of recovering the amounts that have been lost because of this irregularity, right? We then issue a remedial action, which is binding, to say, accounting officer, or DG, specific DG, because it's an accounting officer, you will, within 6 months, ensure that you get this money, that 1 million rand that's been lost. If after that 6 months, the accounting officer still has not done anything, then they are the ones who are liable should we issue a certificate of debt, because they are the ones who are the accounting officer who's accountable for that department, but also accountable for whatever actions are happening. So in actual effect, what the accounting officer would be doing if they're taking a certificate of debt is that they would have let the HR person off the hook and actually take over that particular loss in their personal capacity. So a certificate of debt actually is only issued to an accounting officer or members of an accounting authority, jointly and severally liable, of course. That's the best way I can explain it. Does that make sense?
Yes, it does. Thank you very much. We have another question, which says, can you dive deeper into material irregularity resulting from asset inefficiencies?
Oh, okay, all right. So you're looking at the aspect of resource management down there. So when you look at inefficiencies in terms of assets, it talks about no benefit being derived from cost. So one of the things that we've picked up within the public sector, especially when it comes to software, especially this is where we find the most inefficiencies here, is that we get a department that says that they want to procure a system, for instance, for it to do data analytics, right? Then they procure that particular system and then plug it into the environment. But then they did not factor in that in order to plug in IT systems, there must be integration with already existing systems within the IT infrastructure universe. And then it ends up leading to that software not being usable at all, or that particular software, for instance, being too slow, or for instance, that software not giving the desired results. So as an example, if, for instance, you get a payroll system, and you plug in a payroll system, and every month it must be able to calculate salaries, it must be able to identify who must get a particular salary, who must get an increase, who must get leave days, and all that stuff. And then you have 3 or 4 people who are not paid that particular month because the payroll system was inefficient in actually processing that particular data. Therein lies, for instance, no benefit being derived from that particular software, but the company that gave you the software keeps charging you every month. So that's the best example I can give you with regards to an asset inefficiencies. It is primarily one of the biggest things that we pick up within the IT environment.
Okay, thank you so much. Another long question. It asks, is material irregularity only where money has been lost? Was 1 million just an example of the actual threshold? And then second, can the accounting officer appeal the debt certificate sanction without going to court?
Nice. Yeah, no, I knew these questions were gonna eventually come, and you're gonna grill me. But luckily, you know, we've had enough time to have live examples to be able to give you these answers. So the first one talks about, is a material irregularity only as a result of a financial loss in rands? So yes, the 1 million rand, for instance, was an example. In instances where there's, for instance, theft, in instances where there's fraud, in instances where there's financial misconduct that leads to actual money being lost. But let's go to the definition again, and you'll see that there's the second last O there. So it says, there's a material loss. That's the example that I've given and spent more time on, because that's where it's more prevalent. The misuse, so there's a comma, the misuse or loss of a material public resource. So in this instance, right, you've not actually lost actual cash or actual money. In this instance, you've not overpaid, for instance, services rendered. In this instance, you've actually lost a public resource. And at that particular time, you haven't even done a quantification of how much that particular asset is. So if you remember, I gave an example of police cars. Right. So if you, for instance, misuse a police car, or you lose a police car, for instance, or a fleet of police cars as an example, that becomes a material irregularity, even though we've not even done an assessment of how much that fleet of cars actually is. So yeah, it's not only limited to that 1 million rand value, but we also look at a substantial harm as well. If you remember the example I gave, that if there's a breach, for instance, of the IT systems at the Department of Justice, and a lot of information is lost, at that point, there's no rand value to the data that has been lost. But it's a loss in terms of the fact that you've lost data that you were entrusted with, but also you could be harming members of the general public in that respect. So that's quite important. That's a quite important thing. So at least, you know, we come out of here having that clarity to say it's not only because it's a material loss, but there's other categories that are there. Then the second question that you asked was with regards to, is there an appeal system for a certification of a certificate of debt without necessarily going to court? So what we've done in the regulations is we've put in a two-step alterum partem system there, where the first time that we say that we would love to give you a certificate of debt, you come and make representations, right? And then if your representations are valid, then obviously there will be no certificate of debt issued. But if your representations are deemed not to be valid, then we go ahead and say we're going to issue you with a certificate of debt. However, there's a second step or a second layer that you can actually go to, where it goes to the AG's Material Irregularity Advisory Committee. So it's an external body which actually advises the AG herself directly, where you can actually state your case to say, I believe the decision taken by the lower body was incorrect and they didn't take into consideration my, for instance, representations, or I've got additional representations that were not considered at that point in time. And then at that point, obviously, that committee can then decide to say, okay, we're overturning the decision of the lower body, so that's like a court. Or we still agree with the decision taken, and this certificate of debt can actually be issued. It is only at that stage when you've exhausted those two, so we didn't want to have too long of a process. And these processes have got strict timelines, so that you don't have to wait too long or we spread this thing too unnecessarily. Only at that point can you then say that is a final decision of the AG, and the only body that can review and set aside the decision is a court of law. So for those who are lawyers in the room, you will know the concept of functus officio, that says when the final decision has been made, only then should you or can you be able to take it to court to appeal, to say, no, court, I still believe that the process was unfair. So it's to ensure that we've got a process similar to Paja, as an example, so that at least we're as fair as possible and give people enough opportunity to expand on their representations. Yeah.
Mr. Pengu, thank you very much. Unfortunately, we couldn't finish all the questions. This was a very, very fruitful lecture. I do believe that we must call you again for a follow-up. Thank you very much for all the attendees and for all the relevant questions. We will be forwarding this presentation via our email address for MKI staff members. Thank you so much for joining us, and do enjoy the rest of your day.
Thank you very much.
Thank you.